But the India's trade numbers today showed a deficit, narrowing in the month of November as exports rose. Imports hit the lowest level in more than 2.5 years. For gold and silver especially, the imports slumped 80.49% to $1.05 billion for the month of November compared to year earlier. The gold purchases have been hit this year after India took steps to curb imports of the yellow metal, including imposing a record 10% import duty and requiring that 20% of imports be re-exported. Bhargav Vaidya, proprietor B&N Vaidya and Associates, now joins us on a Mumbai phone line to talk more about that. Bhargav, hi, welcome to the show. What's your sense on the numbers of export-import that show on gold and silver for this quarter, and what do you see industry doing with that?
Good evening. I think we will have some reforms on gold in a short time, and you might see a little bit of more imports, but it should be more stronger because whenever we have seen gold imports have come down, we have seen unofficial supplies and the invisibles or NRI remittance, which is a very important part of Indian economy, also go down by a bigger proportion. So to me, gold import does not affect CAD once it is a disciplined imports. The measures taken and the education given by the ministry has been good, that industry has stopped from increasing number of stores and the shop floor stock which used to go up. So that way I agree the gold imports will come down, but otherwise the real requirement is what you used to say in your program and elsewhere everywhere, the deposit scheme has to improve.
Bhargav, I'm sure you and the associations have been talking to the ministry on this. Do you see any response, any changes in policy going forward?
Yeah, we will need some change in the Basic Companies Act as acceptance of deposit rules and all that. I don't foresee government giving any direct support, but the bank deposit scheme and more than that, the company's acceptance of deposit rules have to be changed, and we have to go to our old days that any jeweler can accept deposit and start using the gold lying in that stock in households. I don't subscribe to the Jewelry Association saying that government should take a lead. No. We as trade can take a lead. We are good enough for that. But we don't want any regulatory hurdles. I think we don't want support, but we don't want hurdles. That's a small message which, if I can give through your channel, I like to give today.
Fair point, and point taken there, Mr. Vaidya. Thank you so much for joining us. That's the view, of course, coming in on the industry, on the kind of numbers that we have seen in sense of gold and silver imports for the month of November. Let's also get on board Ashok Mittal. He's company head retail, MK Global Financial Services, and he joins us live as well for the show. Mr. Mittal, hi, welcome to the show. What's your sense now coming in for the gold and silver prices? The last couple of days have been good. Do you see it as a buying opportunity, or do you think you would rather sit and wait for some more constructive numbers coming in from here?
Hi Manisha, I think what has happened, we have seen close to say $1,200 on the international market, which we had expected, so that we achieved the target. And since these are good levels from investment perspective from international markets, and our idea is that we will not see any tapering happening in the next FOMC meet. So we expect that if that does not happen, then you will see international price of gold going up. The SPDR holdings of gold, silver, which were say falling earlier with a rapid pace, now that although they are falling, but that pace has actually slowed down. So that means people are now a little more comfortable in being invested in SPDR, or you can say whatever gold ETFs are there. And we also see that we are not seeing no knee-jerk reaction. Although in India, because of the tax and restrictions, we see the spot market prices being quite high from the exchange prices or the international market prices. So there is a premium which is built in the spot market prices. So our idea is that on MCX you can see around 29,400 being taken as a support, around say $1,245, and we will expect market to go somewhere around 1,280 or maybe close to $1,300. So we expect a good run up from the current levels also, because this uptick momentum should continue for some more time. We don't expect in this run we will see below say 1220 in terms of dollars. So you buy at nearly 29,400 and expect a target of close to say 30,000 rupees. So in silver, I think $20 is a support where you can buy, and at least one more dollar upside is potentially possible. So we can see target of say around $21 on rupee terms. We can buy nearly say 45,000 in terms of rupee on MCX, and around say 2,000 to 3,000 rupees upside is possible. So you can target 47,000, 48,000 in near term. So I think the uptick which has happened now should continue for some more time. So you can buy it.
Fair point. So we have seen a turnaround coming in even as before the year ends, while it has been a negative year, of course, after some dozen years of gains coming in there. But Vijay, another sector which is closing this year nearly positive has been the energy space. How would you want to look at the prices for the near term, and how do you see the year ending for them?
Manisha, I think the upside potential in natural gas should follow buying support emanate is open up to the 275 odd levels, if at all the buying momentum sustains. Where crude oil is concerned, the immediate resistance would be 6065 to 6080. If that is overcome, if that is taken out, then 6120 odd levels is what I would give it. I am not expecting a very strong rally past 6120, give or take 20 rupees here and there. In the month of December, barring any surprising data points emanating, because while you have cyclical factors like the weather and the hedge funds, which are basically large players in commodity markets, which will try to shore up prices to boost up their NAVs, I think the potential beyond these levels seems a little stretched.
Ashok, how would you look at the base metal prices in that light? Because the recent data has been very positive, but even then we are closing this year on the negative there for most of the base metals and the LME index itself. How would you look at the copper prices to start with, because that's the only one positive trading above its cost of production, and how would you get into the new year with your positions on this sector?
Manisha, I think base metal right now is not something like hot commodity. The whole focus is more on the precious metal and the energy space as far as the investment side is concerned. In terms of data, if you see the production of copper has been quite high in refined copper in China, and we also not seeing any trigger happening from the demand side. So there are no concern. I mean, and we are also not expecting that Chinese, when they come out with a new financial guidelines, they will come out something which will be very liberal in terms of which will support the base metal prices. Our idea is that the copper should remain close to say $7,000 on LME on 3 months forward. So selling anywhere around say 7,200, 7,300 should be a good idea, and we will expect 7,000 or maybe sub 7,000, because other base metals are really not at that level. So should see around 7,000. So we have already seen a uptick happening on the copper price on MCX. So we will expect that we sell at 452, 453. And we will expect the target of around 442, so around 10-12 rupees downside from the current level as well. The main movement which we were expecting on rupee was between say 59 to 64 on a long-term perspective, and in near term we don't expect 64 to be broken. So our idea is that rupee somewhere around 62 can be sold with a 30-40% stop loss. On the downside we will expect again coming back to 61. So that will also have impact on the base metal or say prices.